going to be talking about SaaS in today's market, but first of all, I just wanted to give a brief overview of Silicon Valley Bank. Silicon Valley Bank is the most comprehensive financial partner dedicated solely to the innovation economy. In the US, we have 4 business units, which is commercial banking, which is where I sit. We have an investment banking division, a funds-to-funds, and a private wealth offering. And those 4 business units support all our clients on their growth and wealth journeys. We've been at the heart of the innovation economy in the US for the past 40 years and coming up to 20 within Europe. And we've just literally become a subsidiary in the UK. And are there any Swedish people in the room? I was just going to say we've opened an office in Sweden, but that looks like a terrible investment because we haven't got any Swedish people here. But we'll have to reflect on that one. And within Europe, we look after businesses that operate within the technology, life sciences, and healthcare divisions. And we work with early stage businesses right through to those that are publicly listed. We also work with the private equity and venture capital firms that support you as entrepreneurs. They're very close partners of ours. We're all aware that we're going to go into, or we are in, I should say, really, macroeconomic and geopolitical influences that are going to cause some choppy waters over, the next possibly 12, 18 months, I would imagine. So what I wanted to share with you today is some slides and thoughts on some historic trends that we've seen happen with Silicon Valley Bank, and also some anecdotal evidence of what we're seeing today, because the market's moving really, really quickly. So on the slide in front of you, you're probably quite familiar, possibly, with the slide on the left-hand side. So if you look at the first 3 quarters of this year, it's actually only surpassed by 2021, which was a blow-away year for fundraising. And 2022, so far, outpaces the whole of 2019 pre-pandemic, which is quite phenomenal. And what this does is it shows us that our businesses that we operate in are much better capitalized. I believe they're much better managed and they have access to larger markets. So overall, I feel very confident about the innovation sector and in particular the SaaS market. So we're just going to share some thoughts in a second. Also, data that we have available to us at the moment suggests there's another, I think that figure might be wrong, it's been changed, it should read 83 billion. So we believe there's another 83 billion currently in the process of being raised. Whether that actually happens or not is another thing, because obviously fundraising is taking a bit more time. But nonetheless, it does demonstrate that this wall of cash that is currently available will continue to grow. This slide's really interesting, and one I really wanted to share with you. So the red line in front of you is basically the untapped or unused capital versus funds that have been raised in the last 3 years. So if you look at 2003, it peaks at 53%. So 53% of the cash raised over the past 3 years hadn't been used at that time. And that's linked to the dot-com bubble, so there was investment. Investors were then waiting to see how the market pans out, and then they had this 53% of whatever funds had been raised over the past 3 years. It was then utilized, and it went down to 20%. And then the same happened again in terms of the global financial crisis. So funds, again, investors held on, and the untapped amount went back up to 44%. And we're seeing a very similar theme now. The good thing is that if you look at the amount of dry powder raised over the last 3 years, it's broadly 550 billion globally. 550 billion. That's an extortionate amount of money. And currently, we believe there's about 27% of that that's untapped. And if funds and investors, and there may be a few in the room, they generally, as a rule of thumb, look to deploy the capital that they've raised over a 4-year period. So we currently have 27%, or equates to about 130 billion that hasn't been used. And if we believe that funds are going to continue to raise, the wall of cash available that investors are going to have to consider utilising over the next 4 years is going to be pretty high. So I think in the next 12, possibly 18 months, we're going to see increased utilisation of the currently untapped funds. So again, following that theme of the red line. So we should all be kept pretty busy. We're also looking at investment sizes. So this slide shows us that the number of deals are down, but the investment is currently up. Now, I was quite surprised when we started looking through this data, but what it does, it reflects the fact that 39 companies have raised over 100 million plus in 2022, which is, again, an incredible amount, and obviously has created a large number of unicorns for Europe. And the reason, again, is reflective of the SaaS environment, because these are scalable, big, quality businesses. And that's where investors have really put their money into currently. And you can see some of the unicorns on the right-hand side there, names that you will all be familiar with. And this showing the valuations. Now, we could say this is a little bit outdated, but if the red line is for late-stage companies and the blue line is for Series A. But you'll see an uptick in the actual post-money valuations. The reality is, over the last 2 to 3 months, we've seen those valuations just probably slide down slightly. There's been fewer deals priced, and of those that are being priced, we are seeing a downtick, more reflective of the public markets. And if we look at revenue multiples, again, if you look at the top line on the right-hand side, private revenue multiples, they're currently around 26 times. Our view is that will narrow down to the public markets, which is currently around 5, but it won't get to that level. But we believe that the average will probably go to somewhere, we've got 13 on there, we'll probably be around 14, 15 times revenue multiples. But for those larger, scalable, quality businesses, those market leaders, we believe they will maintain their valuation. But they've got to retain their best-in-class. And by best-in-class, they've got to continue to show revenue growth, but also good cost management and a path to profitability. So we think the valuations will be maintained for the larger scale businesses, but we will see a kind of drop-off in the next 3 to 6 months. And equity isn't everything in the financing chain. Venture debt is being looked upon more favourably. The right-hand slide, we've used September 21 as an index. This is our own index for Silicon Valley Bank lending. So if you used September 21 as the index, our pipeline of debt deals has grown 77% in the last 12 months. And debt can be used complementary to equity. It could also be used in addition to equity. And it's used to help companies get through to the next fundraising. It can also be used for day-to-day operations. It can be used for M&A. And the investors might not like this in the room, but it's also less dilutive and potentially less expensive as well. And if the trend that we're seeing is extrapolated through to the year end, we believe that the debt being lent into the SaaS markets is going to be 20 billion by the end of this year. That's a significant uplift on previous years. Sorry, this slide was due to be taken out because it's a bit confusing. Yeah. And maintaining a long-term perspective. This is actually my favourite slide. And the reason being, if you look at the dot-com era, you had a fledgling technology sector that didn't have real critical mass. It was just burgeoning. But there was a bit of cash, relatively speaking, there was quite a bit of cash put in there. And there weren't that many companies, and obviously we know what happened in the dot-com bubble. You then take it forward to the financial crisis, you had a bigger innovation sector that had a bit bigger in size, but didn't have access to liquidity. So you compare that to the dot-com, which had liquidity, but probably no critical mass. The financial crisis, it had greater capacity and critical mass, but less liquidity. If you then drive that forward to where we are now, and we believe we're going into a downturn economically, what we've got now is this very, very sizable innovation economy with bundles of cash, a real wall of cash. And that's why I get very confident when I look forward in terms of having confidence about the sector. We've got a big wall of cash. We've got a big, sizable innovation technology economy. We've got good management teams. And that makes me comfortable that over the next 12 to 18 months, we're going to continue to see this business grow and grow and grow. And that's why we want to continue to support investors and innovators to help build the economy going forward. I've got a couple of minutes left, so I don't know if there's anyone who's got any questions about this data, and I'll look to see if we can share this amongst you as well, because there was quite a bit of information in those slides. But does anyone have any questions in the last 2 minutes or so? If you can take all that in. No? Okay. Well, I'll leave you there because we've got 1 minute left. But thank you very much for your time this afternoon. And please reach out to myself, or we've got the wonderful Silicon Valley team down here. Please reach out to them. But thank you very much, and enjoy the rest of your day, and good luck with your business ventures. Thank you.